I saw a lot of interesting videos and a lot of people discussing tweets even around FMCG falling and not performing recently.
Absolutely.
Right? Even in the last week, I know very short-term view, Nifty FMCG has fallen by 3%, while Nifty has stayed somewhat flat.
Yeah.
In the last year, while all sectors in the Indian market have been positive, FMCG is the only single one in red, right? So I think it's the right time to talk about FMCG. What is happening there? Why are the stocks not growing? I think it could be a really interesting topic.
Yeah, that is where I saw this interesting tweet as well, and that is regarding Dabur. Dabur again is one of the largest FMCG companies in the country. So Dabur, if you see, the stock price has not moved from 2020. So you are getting Dabur at the price, at the valuation at where it was during 2020, during COVID crash.
Yeah.
So yes, I think the matter is real. FMCG stocks haven't been having a great time, but yeah, let's talk about it.
Yeah, even major FMCG companies, if you look into, are down by 15-20%, if I'm not wrong, from the recent September, October-ish levels. So it's been like a good fall that these stocks had, and people are looking if they can average out or invest more. So what is happening there? What do you think we should do there?
Yeah, there is this narrative of brewist blue chips which is being thrown around. So
Yeah.
are FMCGs brewist blue chips? Are they like real great companies which will always stand the test of times, just being available at good valuation? Why are they even falling?
So I think it's a time correction which is happening in the market right now. The revenues of these companies are increasing, but at a very slow pace. So the market is punishing them. So whenever a company is growing really fast, the market gives them an added P ratio, an added multiplier. And that's when valuation expansion happens. But in this case, the opposite of it is happening, and the companies are getting crushed. Valuations are getting crushed, even though they're still profitable, still revenue is growing, not at a great pace, but still it's growing. Valuations are getting crushed, and the stock prices are not moving. So if you're looking into the giants like HUL, even Dabur for that matter, who you talked about right now, they're not able to increase their revenue, not even by 20%, not even by 10%, right? Their revenues are stagnating. And I think that's a big problem for the industry right now.
And that's exactly where I want to talk about this popular narrative which is going around right now, which says that there is this growing affluent class in India who want to spend more for better products.
Absolutely.
Right? And that's again, we've been speaking a lot about quick commerce. Even if you, and we are users of quick commerce, and if you go to a Zepto or a Blinkit or Swiggy Instamart, and if you search even for a bread for that matter, your popular FMCG brands like, I don't know what, Elite, Modern, I think they're Kerala brands. But again, my point is popular FMCG brands do not come. A lot of D2C, cool, gourmet, boutique brands are coming, and their prices are high.
Yeah.
Their prices are high, and supposedly their quality is also high. And this growing affluent class, they are happy to pay more for this, like talked about better quality.
Protein bars, chocolates, everywhere you see that the listed, so-called listed FMCG company brand products are not even showing up. You, just like Sharique said, even if you look into Amazon, even just search on Google, these companies, because of VC funding or whatever, or their marketing spends, they are putting so much of money into marketing that they are, kind of covering up these listed FMCG products. And I can see even in the revenues and everything, they are not growing, maybe because their sales have come down by a lot, and these all new age startups have, dominated the recent times.
Yeah.
Yeah, so the point being, with the advent of all these D2C brands which are doing really nice, these FMCG, the large legacy FMCG companies, their revenue is taking a hit. One another famous example I can think about is, again, a simple one, quick coming on top of my mind is, Gillette used to dominate the shaving and that market, grooming market.
Yeah.
Now Bombay Shaving Company has come. And I hope the viewers can also relate, right? I mean, with whatever you buy today, you're not buying from legacy brands anymore. A lot of the things you're buying from these new cool D2C brands. So
You're buying into the founder, you're buying into the story.
yes,
Right? There
and
was
the apparent higher quality.
there was a recent survey run on Gen Z, right? Where they asked about what do you buy a product for? And a lot of them replied saying that people buy the product for the founder. Okay, they relate to the story of the brand,
Right.
and they absolutely look into. So maybe that's the next step of marketing, the next step of how D2C and FMCG companies are supposed to grow in India or even across the world, and these legacy players are maybe lagging a bit behind.
And also one thing, these legacy players, I think, took Indians granted a lot. They cut down the quality by a lot. They started, adulterating into the
Yeah,
products.
that food farmer guy keeps
Absolutely.
coming on your feed and keeps telling that how
Yeah.
these big legacy brands, the same brand they have in US and the Western world, but their product, same brand, when it comes to India, the quality is very, very subpar.
Absolutely.
So
Yeah.
they've been doing
So actually
great
people
stuff.
get pissed off,
Yeah.
and like Ajay rightly said, these new age startup founders going on YouTube, going on
Yeah.
Instagram, going on to podcasts
Yeah.
and talking about their product, and even actually going to their factories and showcasing the product, how it is made,
Correct.
is causing some authenticity, and that is bringing up the sales, I guess.
So I have a friend who used to work in a listed company. I'm not sure if I'm supposed to say the name. So it's a very popular listed company whose major product is oil. Right? A specific oil.
I guess everybody can understand by now.
Right? So in the years of 21, 22, I remember their sales went up, right? And they had huge parties and everything was great. And the major reason that their revenue went up was they increased the prices. They knew that even if they increase the prices, there are no competitors for their product. So they were so confident that they increase the prices. And in 23, right, year 23, they found it hard to sell that product, right? When the rural demand started decreasing, when inflation started burning a hole in people's pocket, it became a real problem. And after that, he moved into a different company. Again, I can't give any names here, but they're very popular in the men's deodorant space. Okay. Yeah. So in this company, whatever he's saying is that they have no knack, at least the Indian wing of this company have very less knack for online marketing, right? And they've very less marketing for, and they've very less idea about how to market this product and how to sell it online, right? And they're struggling with it today. So all these new age founders who are coming out with their innovative products, they're also coming out with innovative marketing as well as innovative channels of acquisition for all of their users.
I feel these big players that we are talking about are often slow in, re-innovating themselves and being quick in the market. So they have a lot of systems in place that even they want to, let's say, change some 10% composition in their one product. I think that will take them years. And in this time frame, new age brands will come in and, dominate the market and take that share.
Right. I'm absolutely sure it's very difficult to innovate at that scale.
Yeah.
But I understand the point. We should absolutely establish and be very well aware of what's happening. But at the same time, I want to come back to the crux of the topic, which is, hey, should FMCG investors panic? That's something I really want to know. Yeah.
Yeah, so even with all of these points, even the ones which I talked about, I would still say Nifty FMCG is one of the best places for investors to have an eye out for. Because if you're looking at data and you're looking at Nifty CAGR or its existence, it has given 13.6% average return CAGR to
Nifty.
its Nifty,
Okay.
right? Since whenever it started to wherever it is at right now. But Nifty FMCG has given 14.9%, and all while being a defensive sector.
Yeah.
What does that mean? It does not fall when the market is falling. Right?
Right. Even during
Yeah.
the COVID crash, when the larger market fell, Nifty fell, a lot of other sectors fell, FMCG stood strong. They recovered also pretty well. Yeah.
So I think we need to get into a deeper analysis into this, guys. I think next week, let's come back, same table, same place for all of our viewers out here. Let's do an in-depth analysis of each sector. What is their returns that they got? What are the drawdowns that you can expect from each index based on their last 10, 15 years data? And then we can try to make inferences from that data. Okay,
Excited,
what do you say?
excited. Let's do that, definitely.
So,
yeah.
And see if there is any pattern, and the pattern could repeat, and maybe a future sectors that we could invest in FY25.
Yes,
So
yes,
that we
let's
can
do that.
actually do
Yeah.
that,
Yes.
right?
So
Nice.
do get subscribed if you're interested in that as well.
Yeah, but coming back now, what you're saying is Nifty FMCG has been a good index so far. It has been giving good returns. The volatility has been less. It hasn't been giving a lot of red years as such. So your point is again from the past. That is what you're talking about. Hey, past it was great. And that is something we already discussed. In the past, FMCG companies, these legacy brands were the only brands were available out there. Q-commerce was not a thing. People were not getting exposure. They did not, or there was not even the culture of people ready to pay more for higher quality. Now that is changing. That is a discussion we had.
Yeah.
So given that, though FMCG has had a great past, with the advent of all these new brands, isn't that a threat? What about the future of FMCG? That is what I would love to know.
Absolutely. This new age startups coming up, they becoming big and they coming up with their IPOs.
Yes.
And they dominating these old OGs of FMCG.
Yeah, they could be the legacy brands of the future,
Absolutely.
replacing or killing the current
which
ones.
has more potential.
Yes.
Talking about that, I would like to raise the example of the very recent story of Yoga Bar and even the very old story of Thumbs Up, right? Yoga Bar got acquired by ITC. Thumbs Up, again, which was owned by Parle, I think, got acquired by Coke, right? So this is a standard operating procedure of all FMCG brands. They'll have down years, they'll have new people coming up. They just go out and acquire it because these are cash-rich companies. You look at the Nestle India, you look at HUL, you look at Dabur even. They have a lot of cash reserves that they can afford to go out and buy these brands, right? And the IPO story, what we talked about earlier, is the threat on the other side, where if they're profitable, if they're D2C, maybe they'll go their own route. But there is also this strong route that FMCG companies have proven, in which they just go out and acquire their brands.
No, I see your point. I get your point. I completely understand that it is not a new thing, and they have been doing this for a very long time. A lot of curry masala powders, when I quickly think about Eastern got acquired, Brahmins got acquired, a lot of brands which again were D2C, cool, created trust among people, like you said, and they once they grew big enough, these legacy brands coming in and buying them. So I get your point. So are you saying that like maybe there are a few small companies who would actually play out the David versus Goliath game? They'll stand strong, and they'll maybe, like Mama Earth for that matter,
Absolutely.
they'll might not sell. They'll play out their journey, do their IPO, but only few would do that. A lot of them would just sell for large money to these big companies, and that is how the big companies would continue having great days in the future, is what you're saying.
So personally, I believe, like rightly said, Honasa coming up with their Mamaearth, becoming giant and getting listed and doing well also right now. In future, there could be so many companies coming into this segment, and they could be part of this FMCG sector. And now that we are looking into sector as a whole, maybe these companies might replace those stocks.
Yeah.
Oh, like how we talk about in Nifty.
Absolutely.
Good companies will
Yes,
Yeah.
come
that
into
has
the
killed
index.
all our discussion so far, because we are talking about Nifty FMCG as an index, and an index, by the nature of being an index, it will keep churning out the bad players,
Absolutely.
and all your new big upcoming good companies would only keep coming in.
Absolutely.
And the index is only supposed to do good.
Yeah.
So
Yeah.
that's
So
also
probably I would bet not on individual stocks, but if I'm like bullish on FMCG, because one thing I believe, as long as humans are alive, they need food, they need medical.
Yep.
So,
Consumer goods.
Consumer
Fast
goods.
moving consumer
Absolutely.
goods.
So as long as humans are alive, these
Yeah.
things should strive and
man.
should go move ahead.
Beautifully put.
Yeah.
So-
Beautifully put.
That's a great
So
thought.
Nifty FMCG as an index, as you rightly said, has given great returns, has been a defensive sector, resilient over time, not falling a lot, even protecting your portfolio even when the other sectors are falling. So that is great, and that would continue.
Absolutely.
It's just that you have to be careful in betting on individual FMCG stocks. They might go away. I mean,
Absolutely.
I understand your point of them acquiring small players, but what if you're questioning the spirit of Indian entrepreneurs?
Absolutely.
Right? What if they really want to build out brands for themselves? So those stories could play out.
While
Yeah.
Ajay actually said that these companies are struggling to market themselves, grow themselves, these companies can outshine and, they can replace these big players.
Yeah, let them do their IPO, come into the index organically. Like how we talked about MobiKwik
Yeah.
coming into a space, fintech space, where every other player is not making profits. Paytm is hugely loss making. They started making profits, and who knows, they might be the next giant. Right? They
Absolutely.
have the potential to be that, right?
So so the bottom line being Nifty FMCG, since it has not moved this year, is there a chance that it could give great returns in the coming year?
So, if you're looking at the past data, Nifty FMCG performs the best when market is kind of consolidating. Okay, when the market is on a crazy bull run, like it is after 2020, FMCG stocks or the FMCG index doesn't perform that well. This is not just data from India. This is data from across the world, where FMCG is always considered as a defensive sector. So what you have to understand, if you think that the market will outperform, it's going to be a crazy bull rally for Nifty next year, FMCG might not be the right bet for you. But if you think that, okay, Nifty is going to cool down from here, it could have a sideways move, I think FMCG will be the one to outperform in such a market.
But again, Ajay, I strongly believe in our Indian entrepreneurs. I want them to outshine these all big OG companies and, bring some different change to our whole ecosystem of FMCG segment and, give great, amazing returns to all of us.
And let that happen. That's the beauty of index investing
Absolutely.
as we talk about it.
Yeah.